Ever dabbled in the world of cryptocurrency? It can be a thrilling space, full of potential and possibility. But with all that excitement comes a fair share of confusion, especially when it comes to fees. One platform that's been gaining traction lately is Newton. They claim to offer low-cost crypto trading, but what exactly does that mean? What are these mysterious Newton fees everyone's talking about? Buckle up, crypto comrades, because we're about to break it all down. No free lunches, but maybe free withdrawals? Let's get this straight up front. There's no such thing as a completely free lunch in the crypto world. Every platform needs a way to make money, and Newton is no exception. They don't charge any fees to fund your account with Interac e-transfer, which is a big plus. They even cover the first $5 of withdrawal fees for your cryptocurrency. That's a nice perk, especially for those smaller transactions. The secret's in the spread. So, where do Newton fees sneak in? Here's the key: they use a spread system. Imagine you're at a currency exchange booth. They'll have two prices listed, one for buying a certain currency and another for selling it. The difference between those prices? That's the spread, and it's Newton's bread and butter. Dissecting the spread, friend or foe? Now, spreads can be a bit tricky. They might seem invisible at first glance, but they can add up over time. Here's how it works with Newton. They show you the buy and sell price for a specific cryptocurrency. The difference between those two prices is your fee. Generally, it falls between 1% and 1.5%, but it can vary depending on the coin you're trading. Breaking down the numbers, friend or foe? Continued. Let's say you want to buy $100 worth of Bitcoin. Newton might show a buy price of $101.50. That means you're essentially paying a $1.50 fee for that $100 worth of Bitcoin. Seems reasonable, right? But here's the catch: the spread can fluctuate. If the market is volatile, that spread could widen, meaning you might end up paying a higher fee than anticipated. Alternatives to consider. Before you jump on the Newton bandwagon, it's always wise to shop around. Different platforms have different fee structures. Some might charge a flat fee per trade, while others might have a tiered system based on your trading volume. Do your research and find the platform that best suits your needs and trading style. Keeping it transparent, a look at Newton's fees. Thankfully, Newton is pretty transparent about their fees. They have a whole section on their website dedicated to explaining their pricing structure. You can even see an estimated fee before you complete a trade, so there are no hidden surprises. So, are Newton fees a deal breaker? Ultimately, the answer depends on your individual needs. Here's the lowdown. Pros: Newton offers zero funding and withdrawal fees, with some limitations, and their spreads are generally lower than some competitors. Cons: the spread can be variable, and there are potentially better fee structures out there depending on your trading habits. The final verdict. If you're a casual crypto investor looking for a user-friendly platform with decent fees, Newton could be a good option. However, high-volume traders might find better deals elsewhere. Remember, knowledge is power in the crypto world. Do your research, compare fees, and find the platform that works best for you. With that said, thanks for watching, and until next time.